So it turns out you guys are not going to let me quit the 3K challenge after all. I ran a community poll to see if there was still interest in this series, and 4,300 votes later, only 9% of you told me I can stop. Since I'm a man of the people, and it sounds like a lot of you only subscribed in the first place because of this series, I'm going to bring the 3K challenge out of retirement. But fans will ask why I stopped in the first place. The truth is, there are two reasons. Number one, I like doing the freeloader challenge more because I have fun goofing around, and something had to give because I can't do it all. And more importantly, number two, I was not trading successfully. By autumn of 2022, 3 years after I started the challenge, my account was at $3,300. A 10% increase in 3 years. I tried every possible strategy. Wheeling in the beginning worked out great until the 2020 COVID crash blew me out. I tried buying puts during a global economic collapse and somehow lost money. Buying weed stocks after the election worked out great until Biden said JK. I tried not trading, which didn't work out either. And YOLOing on meme stock earnings was like walking through a minefield for a pot of gold. I tried making big money. I couldn't do it. Couldn't do it. Trading with an account this size, with no ability to make more deposits, is not easy. I made the tough choice to pause this series and go through some reflection. I needed to relearn my craft and focus on trading, not on entertaining with this series. So I watched Tasty Trade's series on Tasty Bites accounts. Those are the small-sized accounts that they service, and I decided to follow their advice. I would stick with the extensively back-tested strategies that win out over the long term, even if they aren't sexy. At the end of December, I withdrew my account back down to $3,000. I want to reintroduce this series with a fresh slate, and I'll show you in this opening episode how trading like a Theta Gang trader and not like a YouTuber has put me back on the right track. Let's refresh my ground rules for the 3K challenge. Number one, I'm staying on Robinhood and I've reset my account back to $3,000. Number two, I'm going to refocus on Theta Gang strategies as described by Tasty Trade. These tend to be less exciting than selling cash secured puts on meme stocks, but there's nothing boring about actually making money. Number three, I must reinvest my gains into either shares or into more Theta Gang options. Once I hit 100 shares of QYLG, I will suspend the shares part of this rule. Number four, I must share all of my trades, win or lose. And I'll continue to share my trades in real time on Discord. My share portfolio is about $1,350 of NASDAQ covered call ETFs, QYLG and JEPQ. And if you remember from the last season, I plan to liquidate JEPQ when I need the buying power. You might also wonder why I have these random shares of penny stocks in my portfolio. These are not from referrals, but from part of another strategy that we can talk about on Discord. The actual strategy that has produced gains is from these iron condors. In 2 months, I've made about $545 without any major drawdowns. That's an 18% gain for the year when SPY is up 6%. I've managed to triple SPY's return without having to take on the added volatility that this usually requires. And for the first time in this series entering its 4th year, I am finally delivering good risk-adjusted returns. I'm obviously very happy with this start, but I need to deliver this same level of success for a much longer time span before I get too excited. Don't take anyone too seriously when they brag about beating the market over 2 months. Last note before we get into it, I need 2 things from you guys. The first, I can't bring myself to say out loud, so I'm calling for backup.
Smash the like button for the YouTube algorithm if you have not done that already.
For real, I need word to get out to my former viewers that I'm doing the 3K challenge again. And second, I'll be tinkering with different film styles. Let me know in the comments how you'd like to see this progress presented. My goal now is to help other traders learn to trade like I'm trading, because it has made a huge difference for this account. My strategy is pretty straightforward, and it's derived almost entirely from the experts at Tasty Trade, like Dr. Jim Schultz and of course, the Saws. I wait for spikes in market volatility, and then I sell low delta iron condors on SPY with about 60 days until expiration. I take profits at 50% and cut losses at 100% of the premium collected. I don't have to wait until expiration. In fact, you should not wait until expiration. 60 days is a long time. And you'll typically hit 50% within 2 to 5 weeks depending on what volatility does. By only entering these condors when volatility is high, I get 2 Greeks working for me. Number 1 is theta, obviously. You get theta decay working for you whenever you sell options. And number 2 is Vega. Vega will likely come back down, and when it does, my condors will also benefit. If market volatility stays flat for a while, that's okay. The only way Vega works against me, if volatility increases further still, which can happen. But since I'm entering when volatility is already elevated, that means it's more likely to come down than it is to increase further. If all that sounds like Swahili, don't worry. I will soon revisit the Iron Condor in a strategy video that can explain this in better detail. I've traded 5 Iron Condors so far this year. Sometimes I'll have 2 open at the same time with different expiration dates, Right now, I only have one open. Let's take a look at that one. I opened it on February 16th for $217 credit, and expiration is on April 21st. Market volatility stayed high for several weeks, so the value of this Condor really didn't change until here in the beginning of March, when volatility dropped. By capturing this decrease, my position is up about 28%. SPY is at about 404 today. Look where my break-evens are. SPY 376 and 442. I've got a lot of play in either direction, and the chance of my Condor hitting 50% gain is a lot higher than puncturing these break-evens. Just today's return of $44 is because SPY jumped 1.5% and VIX dropped from 19.5 to 18.5. One more move like that over the next couple of weeks, and I'll be able to take 50% gain and close. Even if volatility does not drop in the near term, I've still got theta working for me each day. VIX is only 18.5 right now, and I want to wait until it goes above 20 before I open a new Iron Condor. But for demonstration purposes, let's go through how I set these up. Let's go to SPY and open up the options chain. We generally want to aim for 60 days to expiration. That'll give us lots of time and wiggle room while we wait for volatility to dip. I don't have the 60-day expiration to choose right now, and I already have a position open for April 21st. So let's open the May 19th chain for 76 days till expiration. To get a high probability of profit, we need to trade low deltas. So I like to start with the put swing, and we're going to poke around for the 16 delta strike so we can sell it. The 375 strike is a little bit high at over 18 delta, so let's try the 370. It's at about 15.5, and that's as close as I'm going to get for a round numbered strike. So let's sell this strike for $350 premium. Now we need to buy the hedge. So let's scroll down a little bit further and look for the $9 strike. That's usually about $10 further out of the money. 360 is a little bit high at almost 11 delta, so let's go a little bit further out of the money and try the 358 strike. It's still a little bit high at 10, but I would prefer to get the round numbered strike even if it means not getting the perfect delta. So while the 358 put is acceptable, I'm going to elect the 360 put instead and pay $237 in premium. So far, this is a put credit spread with $113 of premium collected. Now to complete the Condor, we need to go to the call side. So I'll make the same maneuver and poke around for the 16 delta call. 440 is a little bit too low on delta, so let's try the 435. That 17.5 delta is a little bit high, but I'll do it anyway because I want the round number so I can maximize liquidity and minimize slippage. Now to hedge it, I will scroll up and buy the 9 delta call, and the 445 is almost right on the nose. So I will give back $110 to buy this call. The Condor is complete, with the put wing offering $113 premium and the call wing offering $130 premium. Robinhood being Robinhood is telling me that my max gain is $249. That's simply not correct. The max gain is the amount of premium that you collected. So in my case, $243. My goal here would be to let Theta and Vega do their thing and close for 50% gain, so about $120. Now it's very important to check your risk-reward ratio with these Condors. These low delta Condors have a high probability of expiring worthless, about 70%, and they have a much higher probability of reaching 50% gain at some point before expiration. Therefore, you should expect that your max gain is going to be a lot lower than your max loss. What you get in exchange for that disproportion is your higher probability of profit. While your max gain is the premium collected, your max loss is the width of the strikes minus your premium collected. In my case, the max loss is the $10 difference between these long and short strikes, so $1,000, minus the $243 collected. The max loss is therefore $757. An acceptable setup would be to collect $250 premium with a $750 max loss. If we attempt to enter this trade, then we can adjust for that, but our probability of getting a fill now decreases. But remember that I said VIX is a little bit low to enter this position. I bet if we waited until VIX was above 20, then we could get that $250 premium without any difficulty. I'm not going to enter this Condor, but for demonstration purposes only, a position like this is going to require $1,000 of collateral. That's Robinhood making you put up the difference between long and short strikes as cash. If I were on a different broker with a margin account, then the buying power requirement would be lower. Let's go back to the profit and loss graph. Now there's an obvious question here. Why am I taking on a $750 max loss for a $250 max gain? It's a good question. My max loss is large compared to my max gain, but we must factor in the probability of hitting one versus the other. At 16 delta, the market is pricing in historical information that says there's an approximately 16% chance that this contract will be worth something at expiration. In other words, there's about an 84% chance that this contract is going to expire worthless. An 84% chance that on May 19th, SPY will land below my 435 short call, and likewise an 84% chance that SPY will land above my 370 short put. Delta is not a perfect proxy for that information, but it can be used as an estimate. If you do the math, that's approximately a 70% chance of SPY landing somewhere between 435 and 370. If I do nothing from here, that's a 7 out of 10 chance that I take my max gain. That is why we have skewed max gains versus max loss. But remember, we don't wait until expiration. We take our gains at about 50%. Tasty Trade calls hitting 50% gain at some point during the trade P50. Based on the math alone, you've got about a 90% chance of hitting P25 and above 80% chance of hitting P50. And we also don't wait for the $750 loss if the market's moving against us. We're not going to diamond hand an iron condor. If the trade moves massively against us because SPY just rips or tanks, we're going to take the L at 100% of the premium collected, and we will close if we are down $250 at any point. The high probability of P50, coupled with taking our losses early if the trade moves against us, puts the math in our favor. And entering only when volatility is high is what really gives us the edge, because now we have Vega also working in our favor when volatility drops. This volatility-driven Condor approach is much more complicated than just wheeling or selling spreads, but if you understand the pieces, then it all comes together easily. All right, now here we are on Tuesday the 7th, and SPY is having a little bit of a rough day, down 1.5%, and the NASDAQ is down a little bit less at 1.2%. I'm right in between, down about 1.4%. Although my Condor is hurting as we get closer to SPY 378, I've still got a lot of room to the downside, and I still have a 15% gain to work with. VIX is rising quite a bit today, and if we do get above 20, I'm going to look to open another Condor, perhaps expiring in May. For now, I'm still in position to ride out this decline and continue on with the strategy. No reason to panic close, things are still going according to plan. Going into the next episode, I'm going to look to close out this position and to key up the next Iron Condor. I'm excited to be doing this challenge again after all, and I invite you guys to join us on our free Discord and we can take on the 3K challenge together. Thanks for watching, and I'll see you guys next time.